And while the chip sector is rallying on the temporary truce, intellectual property is still a key sticking point between the U.S. and China. And it's not just the chip companies that are vulnerable. Joining us to discuss that and who stands to win or lose is Timothy Lesko, principal at Granite Investment Advisors. Good to see you again, Tim. Welcome back.
No, thanks for having me.
You make the case that we need to cast a broader net, if you will, or a wider net, that all companies that have intellectual property are at risk.
Yeah, basically, Chinese manufacturers have been copying American goods, whether they be technology goods, whether they be consumer goods, for decades. And one of the things that we failed to put into place would be some sort of recourse, that when our goods are either copied or intellectual property stolen, there's no court system for us to really go to in China to get a remedy. And that's really what these negotiations are looking for, and we really haven't seen any sign of that yet.
But the Chinese have made clear, Tim, that they are not going to change their laws to change how they go after intellectual property. And in that case, are we realistically going to get a change in how our relationship is with the Chinese as it relates to IP theft?
I think we will. I think that they see us as a very valuable market. We see them as a long-term trading partner. And so I think the hope is that there becomes some remedy, whether it's a Chinese law that is changed or whether they're willing to live by World Trade Organization rules or general agreements on tariffs and trade, that we come to a point where we have perhaps a neutral, mutual ground to air these grievances in the future.
What companies would be on your watch list that are perhaps most vulnerable between the situation between the U.S. and China as it stands now?
Well, I think we're on the cusp of the great move towards automation, and everything that's going to be automated is going to rely on fifth-generation cellular technologies, as well as a lot of other technologies that are either developed here and made in China, or in some cases developed in China. So companies like Google's Waymo division, Apple, if they're developing a car, you have to think that everybody wants to get involved in the infrastructure associated with that automation. And if there are a lot of tariff battles and intellectual property battles, some of that technology will be slower and slower to bring to market. So it really casts a pretty wide shadow over the entire industry.
On that note, Timothy Lesko with Granite Investment Advisors. Thanks, Tim. Good to see you.
Thanks for having me.